You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Welcome to the inaugural episode of the 10 Bagger Podcast, because what the world really needs is another podcast. But in all seriousness, what we all want is to make money and to make a lot of money. And that's where 10 baggers come in. And also the name 10 bagger sounds good. So with me here today on the inaugural episode of the 10 Bagger Podcast is my friend Nick Germain, also known as Nick, the mining book guy. Nick, thank you so much for coming on today. How are you doing?
Jordan, thanks for having me. It's great to be here. I'm honored to be, on the first 10 Bagger Podcast, something I love looking for on my own time.
Now, the first question I have is, do you try and find 10 bagger situations to begin with, or do you look for a company with great potential that could potentially evolve into a 10 bagger in the future?
That's an interesting question, Jordan, because it starts to get into when do I first buy one of these stocks? And something I like to preach is I always like to start small. So by starting small already means you're looking for something that's easier to multiply to eventually get to that 10 bagger level. I think if I'm looking at a pre-discovery type stock, I'm more likely to try to think of, okay, this has 10 bagger potential and it's already in the mindset. But if I'm looking at a post-discovery type stock where there's already some drill results, a lot of times I don't have time to think about that, and I'm just thinking, oh, this is going to ride higher. Maybe I can make a quick 50 or 100%, or some type of short-term catalyst. But yes, then that might evolve into a 10 bagger later. But I think that's the key aspect is, the starting point. And with these stocks, sometimes it's looking at the 10 bagger long term. Sometimes it's more looking for that, quick catalyst opportunity.
Now, you mentioned pre-discovery and post-discovery. With respect to that, now you focus on, I think, mostly pre-discovery, but you said that you will buy some post-discovery plays if they have a lot of upside. So can you just educate our listeners on kind of the distinction between those two and how they can, potentially become a 10 bagger?
Absolutely. And I have a perfect example there that covers both aspects, and that's Osino Resources, OSI, on the TSXV. And we actually, on a different podcast with you a while ago, I think back in June, we talked about my site visit to Osino in Namibia. At the time, that was definitely a pre-discovery company. And I believe it was trading somewhere in the range of 30 cents to 40 cents Canadian. And I was pretty hyped on the stock, but it's not like I knew, a discovery was going to happen. Well, lo and behold, they literally made a discovery on the very first drill hole of a 7 drill hole program. And not only that, but most of the drill holes hit wide, low grade, fairly low grade, but pretty good mineralization. And you went immediately from pre-discovery to that post-discovery phase. Now, this is what's key. Not all those holes came out at the same time. And when the first hole came out, the market didn't, know or didn't really know how to interpret it. So the stock started to move up. If I remember correctly, we're looking at August 2019 now. There was actually a little bit of movement before those drill holes came out because of some promotion, and so it was going to that 40 or 50 cent level. Now, when that first hole came out, it was a really nice hole. I think it was over 160 meters of 0.7 grams per ton. And for a first hole, that's pretty awesome, especially for that geology in Namibia. Well, the market didn't really move that much. I think on that day, it maybe kind of hovered in this 10 or 15% up and down range. And I already owned a lot of shares, and I actually bought a bunch more rather than just, sitting on what I held, because I tried my best to interpret, what was going on. And so we were still, I would say, in that phase of this is post-discovery, but the market hasn't caught on, and I love looking for those opportunities. There was roughly a day or two where it was still trading at 50 cents, maybe 55 cents, and then all of a sudden it went up to 60 cents, 70 cents, 80 cents, and I think there was a peak at $1. So even though I owned that stock as a pre-discovery, thinking about Osino as a 10-bagger, maybe going from 30 cents to $3, when I was buying those additional shares, I wasn't thinking about a 10-bagger in that sense. I was thinking, how many more shares can I buy that kind of turn into trading shares? And, those shares, I could make a quick 50 or 100% return. So in this one stock, I had both of those aspects that I just described. And I'm still trying to figure things out there. I actually think from this level, it's trading around 70 cents. It could be more of a 5-bagger. And, but I'm not sure about that. There's a whole bunch we could say about it on that level. But I think it's really neat to use real examples like Osino to understand, risk reward and to think about that pre-discovery transition to the post-discovery phase.
Yeah, I kind of like to focus on post-discovery just because it's de-risked to a degree, and pre-discovery, especially when you have an audience like I do, pre-discovery is difficult because I don't want to be the only one. I don't want to be the entire market for that stock. But yeah, that's why I like post-discovery. But an interesting thing, Nick, is and you brought this to my attention. We were preparing before we started recording, and there's really many different ways and many different examples of 10-baggers. I mean, you could have an optionality play that becomes a 10-bagger because of a move in metals prices. You could even producers. I mean, there's a number of producers because of exploration largely that have become 10-baggers. Just look at Kirkland Lake, and then you have both pre-discovery and post-discovery. So that's what's really interesting is to finding 10-baggers in the mining world. I mean, there's niches within that. And so your biggest focus is pre-discovery, but you will also look at post-discovery if you think things have improved, if there's still a huge value opportunity there.
Absolutely. And I'll go on a little more of a rant with my new favorite, because I think it describes this quite well. My issue sometimes with post-discovery is that that valuation will move up quite quickly, or it's sometimes it moves up ahead of the game. Like it's almost like there's a leak and then you have to catch up to it. But in this market and in the market of the last couple years, that has not really been the case. I think that happens more often in a general bull market, and we're not in that phase. So I love looking at drilling results, and I'm warming up more and more to post-discovery. But something I've been thinking even more about are companies that kind of straddle this pre to post-discovery phase. And so my next example, which I'm hoping will be the next Osino, is this company called Chesser Resources, which is CHZ on the ASX. Now, there are some similarities to Osino and there are some differences, and I think it's worth describing a little bit because it might give the listener some more insight into what I really care about. So I love exotic jurisdictions, but I love the ones that are that seem to be undervalued. I think Namibia for Osino, Namibia is in the southern part of Africa. It's very likely the safest part in all of Africa. I went on a site visit there. I know that it's much better than people realize. And that's a big plus for Osino. Chesser is in Senegal. Senegal is in West Africa, and it's known, there's a lot of other countries in that area that are well known, like Burkina Faso or Mali, but those countries have actually had increased terrorism despite having lots of exploration projects and mines. While Senegal, not only has it not had terrorism, but the only M&A to happen in Africa this year was a company called Resolute Mining buying a large mine from Toro Gold in Senegal. So that was a signal that companies are looking at Senegal. Teranga Gold has their large mine in Senegal, the Sabodala mine, and they might be doing a deal with Barrick Gold on a mine called Massawa. So these names might not ring a bell with listeners, but they are important activities that are happening right now. But when you look at smaller explorers, there's very few of them in Senegal. Just like Namibia, Osino is basically the only gold explorer. In Senegal, I would say Chesser Resources is the most interesting one there. Now, as a difference, Namibia has very, very low costs because of being tied to the rand in South Africa. Senegal, it's not as cheap, but it's still fairly cheap. And I should actually read something from a Bloomberg article that just came out today. While gold miners face a dearth of new discoveries globally, large parts of West Africa have barely been explored. The deposits tend to be shallow, meaning easy access and relatively low cost. And so that is a general reason I like Africa, but sometimes you don't get, the cheapest across the board. But regardless, they've made a discovery which they are drilling further. And even though it's more expensive than, what's happening down in Osino, it's still relatively cheap compared to other parts of the world. And most importantly is understanding those early drill results. So Chesser is only a 20 million, Australian market cap right now, which was what Osino's market cap was before they made the discovery. We're, talking back in April or May, but Osino hadn't made the discovery yet. Well, Chesser has made a discovery, and what I like is that it looks like there's continuity and high-grade results in that drilling. We're talking numbers like 20 meters of 6 gram per ton or 10 meters of 9 grams per ton, and you can see that in the pictures in the visuals of their cross sections. Now, in Namibia, Osino had lower grade and wider results, but that's where you have to understand a little bit about geology. And I wouldn't expect, a typical listener to understand all that stuff. And I don't really understand all of it either. But you know what? Most of the professionals don't look at this stuff that closely. And I've talked about Chesser privately with some people recently. And, some have shown some interest, but there's very little buying on the market. And even though this has moved from 4 cents Aussie to a high, I think, of 7 or 8 cents Aussie, it's currently at 7 cents. They are fully funded at a 20 million market cap, and their next drilling results are going to come out in a month. And I'm hoping it can replicate Osino. But like I said, there's some similarities and some differences. But maybe one last important similarity is that no one cared about Osino when I was first following it a year ago, partially because they didn't really understand Namibia and they weren't looking there. And I feel like that same thing is happening with Chesser now. But the advantage for Chesser is that they've already made that initial discovery. And you know what? Maybe the market should already be valuing it at 30 or 40 or 50 million market cap, but they're only valuing it at 20. So it's a really good example of something that fits that post-discovery phase, but the very, very early part of the post-discovery phase.
Now, so with respect to, pre-discovery and post-discovery, can you recall some examples, and are there any common characteristics between these companies that do become 10 baggers? I mean, aside from they make a great discovery and they're really undervalued and that sort of thing. I mean, share structure, jurisdiction, the cash that they have, the shares outstanding. I mean, how much, in your opinion, do these things matter with respect to these things becoming 10 baggers, or is it really all about the project and the discovery and just having a major breakthrough there?
Jordan, it's a great question, because I think I've talked to a lot of professionals who will look more at management, and they'll say that management will find a way to make something work, or regardless of the project. And I don't subscribe to that belief. I think that management actually helps the most for a project that maybe is marginal, or at least viewed as marginal, and they can figure out ways to improve it. And it matters more in a pre-discovery sense. When you see fantastic results, you will be rewarded, and you will get that really big reward down the road if it's absolutely superb. It's really, really hard to screw up a fantastic discovery, but you are less likely to get the 100 bagger or the 50 bagger, and it might more likely turn into a 10 bagger if that management, still makes those typical mistakes of diluting too much or, not raising so well. And I will give a couple examples. I think of Mariana Resources as one that probably should have been a 20 or a 50 bagger. And I think it was more of a 5 or 10 bagger. It's a little hard for me to remember because it was initially listed on AIM in London. And by the time it was listed in Canada, I think it really only ended up being closer to a 2 bagger at that point. But there were definitely dilutive raises and poor allocation of resources because that company had a lot of other projects. And Mariana in Western Turkey, was kind of like this last gasp type, maybe not last gasp, but it wasn't a main focus. But you know what? It was such a great discovery that could not get screwed up. And it was still successful for investors. But going back to West Africa, I think Fekola is a great example for Papillon Resources. I don't know management that well there. That was an ASX listed company. If you look up PIR on the ASX, you'll actually find a lot of history there. Most people know B2Gold, and Fekola is the crown jewel of B2Gold in Mali. It's a tier 1 mine now, but it was a 100 bagger from bottom to top when it was on the ASX, but it was a company that was, I think, on its last legs, and as it was going from the initial 5 to 10 bagger, it was a company that was changing its name, changing its focus and bringing on new people. But when it came down to it, it was all about the project. And while I don't remember dilution, I think some of those results were so fantastic as a gold discovery play that the project completely outweighed management. So I think that would be an example where you'd say it wasn't that management screwed up anything or that they were amazing. You just needed an okay management, like a B management, but you had an A+ project. It would have been very difficult to get that full 100 bagger because it had already moved by the time that discovery was made. But I think on the early stages of that post-discovery, you still could have very easily had a 10 bagger. And also importantly for Fekola, that was in a downtime in the market. When it was acquired, it was 2014. B2Gold had an absolute steal, and in a better market, even like a market like right now, that could have been a 200 or 300 bagger. So hopefully those examples, add some perspective here. But I feel very strongly great project is number one. That comes ahead of everything else. Especially when I'm looking at the early stages of post-discovery for those potential 10 baggers.
Yeah, that's a great point because I think, we both agree on this, and, I give you credit for this point. I think just the importance of people gets overstated. And I mean, especially when you're looking for a 10 bagger, because one thing is if you're just going to go invest in only the things that the so-called best people are running or investing in, they're when they get in, it's going to be more expensive, so there's going to be less value there, and also you're going to be getting in at higher prices, when you have big names in a certain company. So we often hear about how important people are, but I agree with you that really the project is the most important thing. And that's not diminishing the importance of people. I think there's many, many good people out there, and we don't necessarily know all their names. I mean, you have to read their bios, evaluate what they've done, and their experience. And I mean, you can find great people just by doing that. You don't just have to follow around the 5 or 10 big names that everybody knows about.
Great point. And, I should give Haya Down, the CEO of Osino, a lot of credit because he has had success with Oryx Gold, which was the Otjikoto mine, which also happens to be a B2Gold mine in Namibia. And he had success with an Ecuador company as well. So he had 2 successes under his belt. But I think his name was not widely known. And, he's in his 40s. And so you have people that are emerging that, they aren't the Ross Beatty or Lucas Lundin. Now Osino did have Ross Beatty as a shareholder, and that helped. But I think a lot of people are just now discovering, who Haya Down is and Osino Resources. And a lot of them are discovering it after the discovery was made. Like it's kind of a funny thing. It's sometimes the discovery ends up making the person, and then people start following the person. And so it's a part of it's the age thing, and part of it is just, it's very interesting how quickly someone who might be a no name or not well known becomes well known because of, one big play. So we're definitely in agreement there.
Right, yeah, because I mean these big names, like, there were nobodies at some point.
Exactly.
Okay, so with that said, I have a couple more questions for you.
Sure.
I mean, would you ever consider investing in, different jurisdictions and companies that are at a different stage than you like? If you saw that they had 10-bagger potential, or are you mostly just so focused on Africa and mostly pre-discovery plays?
Oh, I'd absolutely look at other jurisdictions. Now, I tend to focus on exotic jurisdictions because I think there is often a bonus for being in a jurisdiction that is being discovered by the market at the same time as a discovery is being made or juniors are entering there. So Namibia and Senegal, perfect examples in Africa with, Osino and Chesser that I already mentioned. But I will just say, let's look at Europe, which for a lot of people is not as risky, but it still can be kind of exotic. And, we can give a few examples, other examples that I own, Adriatic metals in Bosnia, very different from Africa, but, I would say much further along the scale in terms of discovery, but they have very clear cross sections, very high grade intersections, kind of like Mariana. And I think it's actually being run better than Mariana, and probably not a 10-bagger from here. But if I didn't own any Adriatic today, and I think it's a little above 150 million market cap, I absolutely would buy into it right now. Even though it's getting more advanced, it's kind of transitioning to that development stage, but I think it's an excellent M&A candidate. And then, one that I've owned for a while that I like up in Scandinavia, Orion Resources, that's AU on the TSXV, getting a lot of attention now. But I think that's an interesting one to look at the life cycle. A few years back, if, you could have bought Orion at 3 cents Canadian, and it hit a high of just over $3. So there you go. That was an elusive 100-bagger right there. Now, very very few people would have gotten in at that 3-cent level, but it's kind of neat that I think that one has been an opportunity at the pre-discovery side. They had a JV with B2 Gold, and they were early in Finland before Finland started getting more attention, and then it multi-bagged on some gold boulder samples, and I owned some at the time. I wish I owned more at the time, and I kind of traded it a bit. But now they've had some drill holes. I think that one needs a little more help, showing some continuity in the results. But it's special in a different way because I think they really do own a district in a jurisdiction that's probably considered as safe as Canada. I think a lot of people like Finland, in that way, but they really could be onto something quite large there. And so it has a healthy market cap at 120 million. But, again, just a little bit like, Adriatic, it's a larger market cap. It's at a different phase from what I tend to look at in the sub 20 million market caps. But if I didn't own any Orion right now, I probably would want at least a small position, even though they have a lot to prove. It's a different example of jurisdiction and a different, stage of its life cycle. So I am open to these other opportunities, but I do tend to like to look at the smallest nano caps, if I find a good one.
And I have a question about selling, but first let me just give a little disclaimer, just so we're all on the same page. Nick, you as well as me, we may own anything. We may own the things that are mentioned. We may not own them. We could buy them in the future, or if we own them, we could sell them at some point. So just to be clear, don't rely on everything that we're telling you, but look at the names. Do your own research, please. Have some kind of an exit strategy if it goes wrong. You should hire a qualified financial advisor, etc. So please consider all those things. But yeah, Nick, with respect to selling and exiting, I mean, is there a point? How can you get out of a potential 10 bagger, before things really hit the fan and there's like potential you could lose 70 or 80%. Is it possible to, get out before that happens? Or, is that just kind of the risk that you have to accept in some cases?
Yeah, that's an important question. I'm still figuring it out through trial and error, but I have a very good example of this year, where, it wasn't quite a 10 bagger from bottom to top, but I think some of the details will be useful to listeners. So I did make money with this West African junior called Roscan Gold, which is ROS on the TSXV. That was a very important discovery because I saw it got a lot of attention from the North American markets when in the past couple years you would have gotten less attention from North American markets on African discoveries. And there were a couple days where, so it started, I think at 5 cents or so, 4 or 5 cents. It traded to, between 6 and 8 cents Canadian. And I bought a bunch at 8. It hadn't moved that much. And then literally the day after I bought some, I wish I bought more, it moved to 16 cents. And so it was on its way. And that was a post-discovery play with good continuity, good high grade results, like things that I felt fairly comfortable to interpret. Now that one was still moving up, and they did a raise with some high profile people in Canada, got some institutions involved. This is where it got interesting because I think the team is technically competent and has had success in West Africa before, but there were warning signs. The last few raises were done at full warrants, and they weren't even done at premiums. And I was like, what gives? Like, why are they doing this? Because they didn't need to. And a lot of other plays you see that, they don't need to raise with warrants when they're onto a discovery. So that was a warning sign right there for dilution. But something that was even worse to me, I really had a distaste for some of the promotion. And I saw it wasn't that they were doing promotion, but they were doing retail promotion in a way that, just seemed like they were trying to get people in without understanding the story and just selling it like it's the only cheap, 20 million, it wasn't even that cheap at the time. It was 20 or 25 million market cap, and saying it's, it's the only play in West Africa. So those were the types of signals that I didn't like. But the kicker was those next drill results weren't that great. Now, it went to 20 cents, 25, I think it touched 30 cents. So we're talking maybe a 6 to 7 bagger from bottom to top. Now, I didn't get that whole move, but we'll say with my position, I was selling between 20 and 30 cents. And I think my last sale was, back down to 15 cents. And so maybe I doubled, I had a 2 bagger on my full position, but I'm glad I did eventually sell out at 15 or 16 cents because now it's down to 10 cents. And I think it's getting hurt by not just the beginning of tax loss selling, but a lot of that dilution. And it wasn't just the results getting missed, or being disappointing, but they weren't reported that well. So that's what's tough with this is you can have a technically competent team and everything looks good, but then all these warning signs start to appear. And that's where I didn't know it was going to go back down to 10 cents or that they were going to really, have trouble on a lot of follow-up results. And who knows, maybe they'll make a further discovery in the future, but there were enough warning signs to start taking money off the table. And so I would never want to tell someone you need to hold from the beginning to at least a 10 bagger to say that you got a 10 bagger. There's nothing wrong with skimming some money off the top and, being, sometimes you'll add more instead of selling, which is what I did with Osino, because that, for me, the contrast is Osino, everything's going right, but who knows? They have more drilling results coming out in the next month or two, and maybe I'll change my mind. So you have to be nimble, and you have to, if you don't understand anything about geology, like nothing at all, you want to talk to someone who's an expert. And I feel like I understand a moderate amount, but I definitely always trying to talk to people who know more than I do. So hopefully that helps a little bit by using a real example where I'm lucky I made money on it, but it was one that looked like it was going to be a 10 bagger. And now I would say it's pretty doubtful.
Yes. That's so important. I would take away from what you said, trimming your gains on the way up. And you can trim and even, buy it back. At a later point, if you think the value is better. And I would say that's why it's very difficult, but, to avoid those types of situations that you're talking about, you have to be able to evaluate the value and the potential value. And, you have to evaluate how meaningful are these drill results. So when this thing shoots up, is it really still undervalued? Is it fairly valued? Or is it overvalued? There's a risk that it could give these gains back quickly. So that's really difficult for most people.
Yeah, and hey, I'm not an expert at this either. I mean, we could probably spend a whole nother or negative 10 bagger podcast. That doesn't exactly make sense, but we could spend a lot of time talking about losers. But we obviously don't have time for that here. But you learn a lot more through your losses than your winners, and it's a constant learning experience. But I wholeheartedly agree with you, Jordan.
Okay, so your best pick before we close is Chesser Resources. That would be your 10 bagger.
That is my best new pick for a potential 10 bagger, considering it is very near term post discovery and still at a 20 million market cap. And I know that there are a lot of other contenders in West Africa, but I really think being in Senegal and having a technically minded team and the results they have so far are far more promising than other people realize. So yeah, CHZ on the ASX.
Okay, and on that note, tell our listeners where they can go to find all your work.
Yeah, so if you go to www.miningbookguy.com, you can sign up for my free email list. Some of the companies I mentioned just here, like Osino and Chesser, those were at least mentioned in some of my emails, before anywhere else. And so that's a great way to hear about what I'm doing, and hopefully I have some more content in the near future. But it's a free email list. Emails go out at most once per week, probably just a couple times a month.
And do you have a Twitter they can follow you on?
Yes. Still Mining Book Guy. You know what? If you do a search for Mining Book Guy on Google, you'll come across the Twitter and everything else. But yeah, I tend to repost a lot of news there, and I post regularly at ceo.ca as well.
Alrighty, well that wraps it. Nick, thanks so much for joining us on this inaugural 10 bagger podcast. And look, when you get another 10 bagger idea in the future, remember this is only 10 baggers here, so no 7 or 8 or 9 baggers. When you get another 10 bagger idea, hopefully at some point you can come back and share it with our audience.
Got it, Jordan. Thanks again for having me, and I'll be on the lookout for more 10 baggers for you.
Thank you for listening to the 10 Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.